Hey there, money masters! Ready to unlock the secrets of finance? You're back on Legend Finance, the channel where we turn jargon into fun and complex into simple. Let's dive into this exciting journey, turning the murky financial waters crystal clear. Let's decode the world of money together. In today's episode, we're navigating the captivating landscape of how does money work? Yes, you heard right. We're breaking down the nuts and bolts of the mighty dollar, the sturdy euro, the resilient yen, or whatever currency you've got jingling in your pocket. And don't worry, we'll make sure to keep it as simple and entertaining as possible. Throughout history, money has been a complex subject, constantly changing and evolving, yet in essence, it's remained the same. We're here today to uncover those enduring principles and to unravel the mystery of how exactly those numbers in your bank account keep the world ticking. So get comfy, maybe grab a snack, and prepare for a fun and informative dive into the world of money. It doesn't matter if you're a newbie who's just starting to grasp the concept of finance or a seasoned money master looking for a quick recap. This episode has something for everyone. Now if you're sitting there thinking, I'm not subscribed yet, let's change that right now. Hit that subscribe button and make sure to ring the bell so you won't miss out on all the fun and informative content coming your way. Remember, here on Legend Finance, we're not just a channel, we're a community. We take on the financial world together, transforming daunting concepts into manageable chunks of knowledge. All right, everyone, it's time to get this show on the road. Let's jump into today's episode and understand, how does money work? Money. How do we react when we hear that word? Do we get a surge of excitement, picturing dollar signs flashing in our heads like in a slot machine? Maybe it sparks a burst of energy, motivating us to finally tackle those pending work emails or spend an extra hour crafting that blockbuster movie script we're so sure will be a hit. But on the flip side, you might not feel so great about it. Just hearing money might make your palms sweat, your heart rate quicken, and your mind start flipping out over all the ways you lack, need, or desire more of it. Regardless of our feelings, we all have some reaction when money comes into play. After all, they often say money makes the world go round, right? Whether it's our morning coffee that costs us $5 to kickstart our day or that hefty $3,000 loan payment we just managed to make, there's hardly a day that passes without us dealing with money in one way or another. We could be behind the wheel of a fancy sports car, flaunting a diamond necklace, or perhaps someone without a home is watching that car whiz by. No matter who we are, in one way or another, money holds significance for all of us. Yet, given how much money matters to us, isn't it surprising that there's still a lot we don't understand about it? Even more, there's plenty we get downright wrong. Consider this a crash course on how our everyday lives intersect with the high-flying world of finance. Here's hoping that by the end of it, we'll all have a much better grasp on this illusion that keeps our economic world turning. You might find it surprising, but the money we're familiar with today, particularly in its physical form, hasn't changed much over thousands of years. Picture this. The first semblance of what we consider a banknote appeared as a piece of leather in China way back in 118 BCE. Fast forward 900 years, and paper currency was born. It took a few more centuries for this form of money to reach Europe and then spread to the rest of the world. Even after all these centuries, the basic concepts that the Chinese came up with aren't that different from what we use today. The main change lies in what these notes and coins signify. The first real worldwide system for valuing currency was the gold standard, which got its start in England in the early 1800s. This system linked a currency's value to the universally accepted value of gold. Imagine this. In a country like the United States, $1 was fixed at precisely 1/50th of an ounce of gold. The idea behind this system was to create a stable monetary environment around the globe. And it worked, at least for a while. But as we've come to understand with natural resources, the supply of gold wasn't as constant as we initially believed. As a result, countries started moving away from using it as a yardstick for money's value. So here's the deal. Back in 1971, Richard Nixon, the president of the US at the time, made a pretty big move. He said, "No more," and cut the link between dollars and gold. By that point, people all around the world were looking at the US dollar as their go-to currency. So when gold wasn't calling the shots for the dollar's value anymore, pretty much nothing else was sticking to gold's value either. Now, here's the million-dollar question. If the dollar isn't tied to the value of gold anymore, then what the heck makes $1 worth $1? Well, we've moved away from a system where something tangible, like gold, backs up our money. Now we're using what they call fiat currency. This stuff doesn't have any real value on its own. It's all about trust. We believe it's worth something because the government says so. All right, so what gives the good old dollar its value today? It's all about supply and demand in the US economy. And who's got the reins on that? The government's financial system, of course. For the US, it's the Treasury and the US Mint who are in charge of making our money. But if you've been paying attention, you'll see that the world's gone digital, and so has our money. Every day, new businesses are springing up online, and iPads are replacing those outdated cash registers. It kind of makes you think, is printing money going to become a thing of the past? So if we're not literally printing money, how on earth does cash get into circulation? Well, most of the money we deal with isn't physical at all. It's just numbers on a computer. The big boss, a nation's central bank, creates huge amounts of digital money and pops it into commercial banks. They've got control over how much money they send to these banks based on what's going on in the country's economy. Remember the early days of the pandemic in the US? Some of that digital money got sent straight into our bank accounts. Hello? Stimulus checks. But that's not the norm. It was a bit of a special case. So let's talk about how it usually goes down. The central bank shoots some money over to banks and credit unions across the country, and they're the ones who get that money out into the economy by lending it to folks like us. This leads us right into our next hot topic, debt. Now, this might surprise you, but about 80% of Americans have some kind of debt. But here's the kicker. A lot of people don't really get what debt is or how it works. It seems a bit wild, right? Well, let's dig into that a bit more. So most of us understand this much, and there are tons of studies to back it up. Even thinking about paying off debt can seriously stress us out. No one likes being in debt, right? But here's the kicker. With the cost of everyday living shooting way past what we're earning, most of us can't get by without taking out a loan. Just think about it. How do we buy cars, start businesses, go to college, or even get a house? Loans, that's how. Especially when it comes to something as big as a house. Who among us has enough cash in the bank to buy one outright? But we all need a place to live, don't we? Some of us decide to rent, while others bite the bullet and get a mortgage from the bank. But let's be real here. Banks aren't charities. They're in the business of making money, and the way they do that is by charging us interest. So what's this interest we're talking about? It's the extra cash you have to fork over for the privilege of using money that a bank or other financial institution has loaned you. Imagine it as the rent you pay for your apartment each month. You don't own the place, but you're paying for the right to live there. It's the same deal with loans. You don't own the money you used to buy your house, but you're allowed to use it for a fee. Credit cards let us borrow money to make purchases or withdraw cash. We get a monthly statement and need to pay back what we've spent. If we clear the full balance monthly, we avoid interest. Many cards offer perks like points or cash back, but caution is crucial. Overspending can lead to debt. Using cards responsibly helps build a solid credit history. The key is mindful spending, clearing balances, and avoiding cash advances unless necessary. Balance and smart spending are essential. Wise management of credit, savings, and income can enable us to invest, a key strategy that allows our money to work for us. Investments, which are inherently risky yet potentially rewarding, range from relatively safe bonds with lower returns to high-risk, high-reward options like individual stocks and cryptocurrencies. Ultimately, the goal of investing is to increase our net worth, reflecting the fundamental purpose of money in representing value. The value we assign to a worry-free retirement guides how much we contribute to our retirement accounts. Likewise, personal values like comfort and social status might justify spending more on a luxury car. We decide on our expenditures based on what's worth it to us. Our societal obsession with worth, driven by material goods, personal accomplishments, and even the successes of others, often leads to oversimplified representations of wealth. Publications like Forbes and Bloomberg assign numeric values to the success of the wealthy, yet obtaining accurate data on personal assets and liabilities is challenging. Particularly for celebrities and investment bankers, their wealth is often intertwined with business ventures and investment portfolios, adding complexity to an already elusive equation. Despite this, our fascination with wealth persists, perhaps serving as a benchmark for our own achievements. In a world where economic news frequently dominates, understanding money and economics may not guarantee a spot on the billionaires list, but it can offer clarity and lessen anxiety. In our shared journey through the intricate world of money, we've revealed its strength and scope. Each piece of currency, each digital transaction, tells a tale of ambition and innovation. As we pen future chapters of this financial odyssey, remember, your true value isn't defined by what's in your wallet, but by the stories you write. Until we meet again, be sure to like, share, and subscribe to continue this exploration with us. Until then, stay legendary.